Hey, it's Dan Jones, owner of Carolina Real Estate Experts. Thank you for stopping by the video blog. Today, we're going to talk about the economy, jobs, and how it has or has not affected the housing market. So the first thing I want to talk about are the forbearances. That's been a big topic, but I think it's really worthy to note the amount of equity people have in their house. So even if their job doesn't come back, there's at least options to sell your property. And if you had to rent for 3 to 6, 12 months, there is an option while you look for a new job. So the amount of people you can see with over 30% equity is well over half of Americans. And even the folks with 10, 20, 30% equity, we're still above 30%. So the amount of people just with at least 20% equity is almost, or actually a little over 3/4 of all Americans that are homeowners have at least 20% equity in their house. So if your job doesn't come back, you do have the option to sell. So folks that anticipated all the short sales and all the foreclosures, they kind of missed the equity boat. People do have equity in their property. The next sort of graph we're going to look at is just kind of the unemployment and how many of those jobs that were lost were not coming back to the market. So in April 2010, kind of when everything was still pretty bad off economically, 10.5% of all the jobs lost during that period were never coming back and never made it to the market, right? And then in February 2017, after the economy had recovered a great bit, the unemployment rate between that and jobs not coming back was closer to 5%. And then as you see into 2019, towards the end of that, 3.7 of the jobs lost were not coming back of the total unemployment. And then as we get into the pandemic, even though unemployment was at 9, 12, 14, 15% fairly rapidly, these are the estimated amount of jobs that were not coming back to the market. And as you can see, the experts are predicting about 6% of the jobs lost would not come back to the market. So some good news for June. An estimated 3 million jobs were to be added, and the actual numbers came in over 4.8 million jobs added back to the market in the month of June. So if you haven't taken a look at your goals for 2020, now is the time to do that. The economy is back on the rise. People are going back to work. Some people are still staying, working from the house, but jobs are coming back. So I think it's time to revisit your second half of the year goals for 2020. And it's time to make things happen. So what does all that mean for the housing market? So with all the skepticism about, the market's going to crash, unemployment is just really high, jobs are coming back, they have come back, and they will continue coming back as the economy continues to grow and hopefully we get through this pandemic. But what does this mean long-term for the housing market? Interest rates are still at an all-time low, some of the lowest we've seen in several years, we'll put it that way. We just locked in on a refi on the property for 2.75%. You can't beat it. It's cheap money. And if you're purchasing a house, you're kind of in the same ballpark depending on credit score and kind of what you're looking to put down. So the overall economy has impacted slightly the housing market, but it's coming back very, very strong. And numbers look pretty similar to what they were last year. If there is one thing we do need help with, if you're thinking about selling your property, please reach out to us. It's extremely low inventory. We have hundreds of buyers. We need sellers. Let us know. And if you are looking for a good deal, let us know on the purchase side as well. We come across some pretty good deals, and oftentimes a lot of our listings aren't even hitting the market and going under contract. So I appreciate you watching the video blog. Thanks for stopping by, and look forward to meeting you at the close table. Talk to you soon.